So the three main reasons that people don't invest are that they think that they need a lot of money to get started, which is not true. They're scared to lose money, but you can manage your risk, and they think it's complicated to get started, or you need to be an expert to invest in the stock market. But those are some of the biggest myths about investing. So let's look at the last one. It's not as complicated as people make it out to be. It can be as simple as you want it to be. If you can open a bank account, you can open a trading account and get started. So I've been investing for a long time now, and like a lot of new investors when they get started, I thought that I had to know all of this financial information about the companies to even decide what was a good company to invest in. I looked at charts, I looked at financial information, I made all these rules and criteria for myself that it had to have a certain level of return on equity, it had to have so much debt to equity, it had to have all of these factors before I would even consider investing in it. And while I enjoy looking at the data, it was a little excessive. And not only that, as time went on, I realized that stuff doesn't matter as much as you think it does. In fact, I found that investing was far more simple than I made it out to be in the beginning. To be honest, investing can be a little bit boring. It's not all the bells and whistles that you think it's going to be, especially if you're a long-term investor. And if I'm being honest, all those rules and criteria that I made for myself in the beginning didn't really affect my portfolio as much as I thought that it did. But do you know what made the biggest difference? What helped my portfolio the most? Just letting the market do its thing. Having a diversified portfolio, ignoring the short-term volatility, and just letting good companies ride out. Time, compound interest, and all of that did more work than me trying to choose the right company. And once I just chilled out and just started doing the bare minimum of research, which I'll talk about in a minute, my portfolio did just fine. In fact, it probably did better than it did before. So what are the only things you need to know about investing? Well, first you're going to need a trading account. I usually recommend someone go with something easy. If there's one connected to your bank already, then great, you can use that. Or just choose one of the bigger ones that have a good reputation. They're all pretty much the same, they just look different. The trading is the same, the buying and selling is the same. Just choose one that you like. Once you've got your account, you can actually just go in and have a look around. Have a look at what you actually have to do. How do you buy a company? How do you sell a company? It's really not as difficult as you think. You just tell them what company you want to buy or what ETF you want to buy and how much of that you want to buy. You can either put in the number of shares that you want or a dollar amount like $5,000 worth. So once you go in and have a look around, it's going to be way less daunting. So now you've got to decide, what are you going to buy? What are you going to invest in? Now, most people start with exchange traded funds, and I think they're great, especially if you go with an index fund like VAS. VAS is one of the most popular in Australia, and it holds the top 300 companies within Australia. Or you might decide not to go with an ETF, that you want to buy individual companies. There isn't any right or wrong answer here. ETFs are great, but individual companies can be fun as well. I have both. They're just different ways to invest. So don't let anyone tell you that you have to go with ETFs or you have to go with individual companies. Do what feels most comfortable with you. And then you got to decide how much you want to invest. So look at it like a savings account. You want to put so much money in each month and grow your account over time, and time is going to build it as well. That means you get to buy more when the price is down and less when the price is up. So it all evens out. If you are going to buy individual companies, then make sure you stick with the top companies that are more established. In Australia, I only stick with the ASX 200. That's the top 200 companies within Australia. I only buy from there. And you want to have a diversified portfolio. What that means is you want to have at least 10 different companies. You don't have to do it straight away. You can buy one company now and another company in a few months and slowly grow your portfolio that way. You don't have to rush. Or you can just buy an ETF that already has that diversification built in. Either way is fine. Now, when I am deciding what company to buy, usually I only look at two factors when I'm deciding what company to buy. I look at what the stock price has done over the last 5 years. You can just do a quick Google search on this. You can put the stock code in and chart or ASX. It will show you a chart, just change that to 5 years to see if the price is increasing. And the second thing I look for, because I'm primarily a dividend investor, I look at the dividends that the company is paying. I want a high dividend yield. Now you can think of dividend yield kind of like an interest rate. What they quote as a dividend yield is what the company pays out per annum. Now this is going to change, of course, and if you buy at a certain price, you lock in that dividend yield, and it's probably going to get better over time as the price increases and as they start paying more more out per dividend. So I look for a dividend yield over 5%. Sometimes I'll go a little bit lower, but that's mainly what I'm looking for. And more importantly than that, I want to make sure that the dividends are stable. Now, in your trading account or whatever you've used to research your stocks, I just go in and have a look at the dividends to see what the past dividends have been. Now, in my trading platform, they show it as a graph, which is really easy to see. And what I'm looking for is to make sure that they're paying roughly the same or hopefully growing over time. And that means that they're stable. So with those two pieces of information, the stock price is increasing, the dividends are nice and stable and consistent and growing, I already know everything I need to know. Now, I am not buying and selling all the time. In fact, I rarely sell. I only once a year go in and have a look at my portfolio to see if everything's still on track. During that time, I don't usually sell anything unless the company has drastically changed its management. So pretty much I just buy and hold forever. So currently in my portfolio, I have about 14 individual companies and 3 ETFs. That's just what I've built up and what I'm comfortable with. Now, I started with just $1,000 a long time ago, and I was gradually putting money in each month. I would put some more money in. Sometimes it would only be $500. Sometimes it'd be $1,000. If I got any tax refunds, I would put that money in. And over time, my portfolio has now grown enough that I can live off the dividends. And that is such a wonderful feeling. Now, it took a long time, but time is what was most important here. I don't think I did anything special except invest in nice, stable companies. So don't overcomplicate things. Just keep it simple and just start investing in some of the bigger companies that you know about, and just make sure your portfolio is diversified. That's really all you need to know. Or just buy an ETF, which is also nice and easy. You certainly don't need to overcomplicate things, and you don't need an economics degree to get started. Happy investing, and I'll see you in the next video. Bye.